Let's talk about the technicals as well. We've got Manav Chopra of Indiabulls Ventures who joins us on the show now. Hi Manav, good afternoon and thanks a lot for joining us. Also joining us is Sarvendra Srivastav, independent market expert. Good afternoon to both of you. Manav, let me come to you. We're back above the 11,000 mark after two volatile sessions. What's the approach on Nifty right now? You taking any trade?
Yes, absolutely. In fact, the kind of momentum that we've seen in past few weeks, it has been more or less a consolidation move, and it indicates that the markets are forming a higher base before we inch more higher. So, most importantly, I think 10,900 is the most important lower support levels, and I sense we are going to hold these levels going forward, and eventually we will be breaking on the upside because the trend is intact. And when we are looking at the overall oscillators, they're still in the buy mode. Definitely, I sense more participation coming all across, and there are some early signals of PSUs bottoming out and the pharma bottoming out. So once we see the breakout on the upside, you will see the active participation coming. So on the immediate basis, we have a target of 11,200 for the Nifty, but eventually I think 11,600 is also quite possible looking at the chart formations.
Okay, buy on dips is the call coming in from Manav, and the resistance that he highlighted, remember 11,080 is also very close to the recent high that we've seen on Nifty last week. Sarvendra, how are you approaching Nifty and Bank Nifty?
Yeah, very good afternoon. See, I think these readings are kind of historical first, with the kind of divergence we have between the mid cap and the large cap space, and especially even within the large cap, those 10, 15 larger names. I think such divergence has never been seen in history. So it's the first time for everyone. And it's a little bit confusing because we also positioned ourselves to play this breakout last week. But it's not gone anywhere. So it's now almost 10, 12 sessions that we have not gone anywhere. And the net gain would be less than 15 points per day. And that is not what I would qualify as a good, decent breakout from a range. So this is definitely not moving. So my sense is that broadly, I would say that I just want to stay out for some time and just wait it out into this range of say 10,900 to 11,100 or thereabouts, or probably also the all-time high at around 11,170 odd. So I think this would be a range. It is not doing much. The trades are more stock specific. Index, I'm not very comfortable now into this breakout, so I don't see it as a breakout. So till now, Nifty does not register an all-time new high. It would be difficult to venture out and put some trades on the Nifty on the buy side. Now, were we to fail below 10,900, then probably this breakout would be a false one, and then you can look at lower levels. But as I said, very, very difficult times, once in a lifetime that we are seeing these readings, and talking to participants, the old timers also, I think we have not seen this kind of divergence. So we will see it as it plays out. Yeah.
Sure. So Sarvendra is suggesting to avoid taking any fresh bet on Nifty, he's waiting for the all-time high level of 11,171 to be breached, and probably then he's going to take a fresh call there. Manav, coming back to you, you're also suggesting to buy Bank Nifty on dips, and also tell us what are your individual stock trading strategies?
See, Bank Nifty, it's also forming a short-term consolidation, and when I'm looking at the PSU Bank Index charts, stocks like SBI and the PSU basket is, it has, it's very much an oversold zone. So I sense a good move coming from the PSU Bank space, and also the Bank Nifty is holding on to its important crucial support of 26,600 since past couple of trading sessions. So the breakout for this would definitely occur once we see the index moves above 27,000 levels, but eventually I sense this breakout to happen on the upside, because the trend is intact, and the prices are holding to on its important crucial support zone. So one can look to buy even at current levels. The immediate target that we see is 27,300 for the Bank Nifty. My stock picks would be, my first call would be buy on IGL. Basically, on the weekly charts perspective, the stock has observed a breakout from its falling trend line, which confirms a good bottom formation for the stock, and eventually we expect high levels to be achieved. Most importantly, there are some good volume confirmation on the daily and the weekly perspective, which sends we expect good buying to carry forward. So at the current levels, 265 would be the stop loss for an upside target of 315. My second call would be buy on GLENMARK. Basically, we've taken a good bullish stance on the pharma space, and I sense pharma as an index is bottoming out for good 6 months or even eventually for a year. So there is a medium-term bottom in place, and GLENMARK, after a recent corrective decline, has been forming a good base. 550 would be the stop for this stock, and on the upside, a short-term positional target of 615, but eventually the stock has a potential to test the levels of 700.
Sarvendra, your ideas for the afternoon?
See, yeah, as I said, trades are more stock specific, and we will continue with that. 3 trades as usual. The first 2 on the buy side, and the solitary sell that I have to just get it on my mail. Yeah.
Those are some individual. Sorry.
Sarvendra,
Yeah.
you grab the ideas with you, or should I help you?
Yeah, I think my
Your
intellect is
ideas,
slightly stuck.
Sarvendra, let me tell you, you recommended a buy on Castrol and
Yeah.
a buy on Equitas.
Yeah, I have them. So the first one, I have to see the levels. So there's a buy on Castrol where we believe that we are setting up into a short to medium term bottom, and my sense is that stock could probably bottom out for good for the next 12-18 months as well. But sticking to a week, 10 days, I would say that Castrol can go all the way till 180, and I would put that as a target into this call. Stop loss at 154.40 on a closing basis is what I would recommend on Castrol. The next one is a buy on Equitas, more or less almost similar patterns, but the stock is finding good support around these areas. So a bounce back towards 150 is very much doable on Equitas. So buy there as well. 128.60 on a closing basis is the stop loss that I would recommend. All are spot prices. And the last one is a sell on Berger Paints, where we believe that a 2-bar reversal pattern on daily charts had occurred a couple of sessions earlier, and I think as long as those highs are not taken out, the stock should slip lower. So I would say a target of around 290 on the downside for Berger Paints on a trading angle, and a stop loss at 321.10 on an hourly closing basis.
Okay, stay on, gentlemen. Let's get in Deepak Shenoy, founder and CEO at Capital Mine. He joins us right now on the show. Boy, I've been waiting for this chat for some time now. Deepak, good having you. Good afternoon. Thanks so much for joining in. It seems to be the case, Deepak, that now that whatever quarters of the market were nervous because of the no confidence motion for whatever reason, are now knowing that this is not going to be a make or break. There's some bit of confidence that has returned. But there is a distinct characteristic, Deepak, the last few days. While there might be expensive stocks or other stocks that have been beaten down black and blue in the last few days, there are enough and more expensive stocks which are getting beaten down on the slightest miss. Mindtree, a case in point yesterday. Ashok Leyland, because of this Axel norms over the last 3 days. And Bajaj Auto today.
Yeah, I think, firstly, thanks for having me on your show, Neeraj.
Pleasure,
I
as
also
always.
think that, market has been showing a very different direction. Sometimes results get, we saw Bajaj Finance yesterday. When the results came out, the stock tanked 4 or 5%. And since then, it's up, I think, 13%. As of today, we've, as much as, one can say that's expensive, they have shown absolutely stellar results. So, you are valuing an NBFC at perhaps 40 or 50 times earnings 1.5 years, 2 years later. But it has demonstrated that it's capable of delivering quite extraordinary results. Bajaj Auto, I thought the results were good. The stock's getting beaten down. I think there's a decoupling of expectations versus reality. But overall, the numbers don't look extremely bad to me. There are going to be margin pressures in any market. If you're looking at a long-term play, there will be some times when margins compress, sometimes when margins expand. And this is natural because you can't control your input prices like steel or commodities. You can only increase them in the future, your selling prices, but you'll try to absorb small price increases in your margins as much as you can. So I don't think this calls for like such a massive beating, but as you said, the market is now, it's been on steroids on the upside. It's going to be on steroids on the downside. The correction is going to be strong on both good stocks and bad stocks. We're seeing bad stocks getting their comeuppance right now, but good stocks are also getting beaten up, and that's where opportunity is. A lot of mid caps, a lot of small caps with much better valuations. You've got to be careful of what you buy. But once you know that, I think that's a you're in the market for good valuations now.
What did you make of, Bajaj Auto numbers, Deepak? Why is it that such a sharp reaction?
I can't predict why, because reasons abound after the fact. But one of the things is that their realization per vehicle has come down about 6 or 7%, 64,000 or 60,000 or about that. But overall, we're looking at the monsoon right now. We're looking at two-wheeler sales in general, and we are positive on some two-wheeler makers, but we don't have Bajaj Auto in the portfolio. But I feel that going forward, this is not going to be a weak stock. It isn't valued very richly either. It's not valued at the 40 or 70 or 80 P's that many FMCGs are valued at. So I don't believe that this kind of a beating is going to last too long. It may be providing an entry point, a good place to start looking at it for the longer term. Remember also that they are in an expensive bike category as well, where they compete with the likes of iShare and perhaps some of the bigger varieties. And I believe if they start showing performance there in the next few quarters, we will see much better numbers coming forward. So no positions, but I think this fall is it's probably overdone.
Okay. Bajaj Auto has fallen post its numbers. Remember, margins is something which the street is disappointed about. 8% lower for Bajaj Auto. But remember, overall performance, despite of posting a very, very strong volume growth of 38%, they did take some bit of price hikes in the quarter, but that was just not enough, even for the revenue growth, which has been below with what a lot of analysts on the street were estimating. That's Bajaj Auto for you. One more number I want to discuss with you, Deepak, and that's CIET. That's also reacted quite sharply on the upside post the numbers, which look pretty good on year-on-year basis. Any thoughts here?
I'm sorry, I haven't seen CIAT numbers yet. They've been having a lot of number crunching recently with all the annual reports in, so I don't have an idea of the numbers right now. I'm so sorry.
Okay. Deepak, the kind of stocks which have been rallying, which has actually taken Nifty to the current level where it is at 11,000, these are all quality premium stocks where valuations does appear to be on the higher side. And the other pack which is doing well is the FMCG pack because of the rural theme, which a lot of analysts have been betting on. Jubilant FoodWorks, one such stock where valuations are at sky high, and not today. I think historically the stock has been trading at higher valuations. It's touched its lifetime highs ahead of its earnings next week. At these levels, what would you suggest somebody who is holding Jubilant FoodWorks?
First, as a disclosure, I am long it on a momentum basis. We find there is a lot of momentum in the stock, and there is no denying that there is a lot of strong buying that's happening, and sellers are weak in this counter. So there seems to be a very interesting dichotomy of sorts of fundamentals versus what's happening with the price. The fundamentals of Domino's itself, I don't know if you've seen the worldwide results, weren't as good. The stock tanked after its results in the US, and there has been some consternation about sales growth and so on. But we don't have that picture with Jubilant yet. And Jubilant has performed in the last 2 quarters. I believe some of it was because of it coming out of a demonetization regime when you had 2 quarters of low cash in the system. They would have shown good results. We'll see how the July or June quarter results come in, which is critical to how we can analyze them fundamentally. Having said that, I don't think this is as great a story fundamentally as it is purely on momentum. The problem really I'm having is that we get so many avenues, at least where I am in Bangalore and perhaps where you are in Mumbai and in Delhi as well, is Domino's the only source of pizza, or is Burger King the only source of burgers? The answer is probably unequivocally no, more no today than it was maybe a couple of years back. There was a time in which pizza was almost synonymous with either Pizza Hut or Domino's. You pretty much had those. Now you have at least 30 or 40 different types of pizzas available. So in the long run, I feel that this might hamper them. And I actually like a McDonald's approach of targeting the younger age group compared to what Domino's or Burger King are doing. So I may be biased in that from a fundamental perspective. I don't think this is a great pick because the valuations are extremely high. However, momentum stays. If you're a momentum player and you know how to trade momentum, this is probably a stock that you want to be in.
Yes, Z Media numbers on the screen as well, and the stock is duly reacted, by the way. Yes, there is a one-time gain, but there is an expansion on EBITDA margins. And as a result of those numbers, there is an uptick in the stock. Revenue up 35% for Z Media and EBITDA up 43%. Yes, the base is low, but for this business to show such expansion in revenue and EBITDA means that they've gotten a quarter which is very good, and now the question remains whether they can stretch this into the quarters ahead or no. A sharp reaction to that stock. I'm no one to say whether this valuations are justified or no, but I can understand the positive reaction because the numbers in this business seem to be fairly decent. Any thoughts on Z Media at all, Deepak? I'm just throwing that out of the dark at you.
I'm honestly not tracking it, so I don't have any context.
I can imagine. Okay, the big boys then, Deepak, and then I also want to talk about Kesoram with you. But first, the big boys, the Bajaj twins, and a rip and roaring rally there, and you can't really take Reliance out of the equation. The last 3 weeks at least, if not more, if there's one stock that's had consistency in an up move at a large cap level, it has to be Reliance Industries, trading at life highs yet again.
Well, first on Reliance, I think, what's interesting about Reliance is that they have this massive bet. Nobody else in that size category of industries has actually ever tried to make such a big bet and gotten a reasonable amount of success. So I feel that the future in their business is not the petchem, not the refining business, but it is going to be the geo and the data business per se. Having said that, it's like a little bit like is anybody going to make money out of this right now? I think next 5 or 6 years, no. They are also heavily into debt. So in the short term, the results might actually disappoint more than anything else because interest rates are going up. They're probably seeing a 50 to 60 basis point increase in interest costs in comparison with the previous year because commercial paper prices have gone up substantially, and then you've got 190,000 or 200 plus thousand crore of debt that's sitting on their books. The second part is they do use a lot of creative accounting, so they will manage to move things around so that it looks good. But in the end, you can't deny that this is a very, very heavy debt-driven, capex-driven business. The primary drivers currently of cash flow are petchem and part of it is refining, where I think margins may contract a little bit. There's not much happening in the exploration area. So if one were to look at Reliance, it's a 5-year ahead, 6-year ahead, but not very expensive. If you consider that this might be India's largest data provider, both from content and from the transmission framework business. But you got to take that bet because that is the bet in Reliance. It's not going to be anything else.
Okay, Reliance Industries contributing as usual to the gains that we've seen on Nifty today, also considering that's one of the heavyweights. But moving on, even as foreign investors are looking to pull out of Indian debt as well as equity markets, but there are a few stocks that have been on their radar. Which are those stocks? Let's ask Yash Upadhyay, who's joining us for the chart of the day. Yash, over to you.
Thanks for that, Navneet. So even as foreign investors are on course to pull out money from both the debt and equity markets for a 4th consecutive month, there are certain pockets which have seen an increase in buying. Future Lifestyle Fashion comes in at the top, wherein the foreign investors have raised their stake by as much as 10% in the quarter gone by. Following it up is Magma Fincorp, where they have raised stake by about 7%, and Fortis Healthcare, which has been in the midst of a takeover battle. Rounding up the list are Indiabulls Ventures and Emphasis, who have both given spectacular returns on a year-to-date basis, almost more than 50%, and even in the quarter. So there too, they have been seeing an increase in buying from these foreign investors.
Okay. Yash, thanks for putting that into perspective. So that's, some thoughts. Now, before we get in, final thoughts from Deepak Shinoy on Kesoram Industries, just a couple of chart checks since we were talking about those stocks. Manav, if we still have you, Reliance Industries trading very close to the day's highs. What does somebody who doesn't have any position right now, Manav Chopra, on Reliance Industries do with the stock?
I think someone who's not having a position should actually wait for a dip to get into the stock. Definitely the momentum for the stock is very bullish. And just few days back after a short-term consolidation, we have observed a good breakout. But on the immediate basis, the support for the stock on short-term basis is close to 1100. I sense in case if there is a short-term dip on the intraday basis, maybe today or after a few days, one can still look to get into, but keep a strict stop loss of 1050. I think that is the momentum play which will continue to do so. In spite of such a good momentum, we have often seen new volumes high with the prices making a higher high. So I think this clearly indicates that the momentum is still strong enough as long as the prices are still in the overbought zone. I sense on the immediate basis this rally could continue towards the levels of 1200, and that is the level where on the higher side one can look to book partial profits. But I think it's better to still play this stock on the upside for the momentum and maintain a buy on dips.
Maintain buy on dips on Reliance Industries. Well, there are a lot of other stocks. Pull up Bandhan Bank and RBL Bank. Remember, the earnings of both have come out yesterday and day before yesterday. Bandhan Bank now sitting with gains of 9%. It's also touched its life highs. RBL Bank also sitting with gains of almost 3.5%. Deepak, relatively newer banks, but the earnings have been pretty good, and Street too seems to be rewarding the numbers that both these banks have posted. What would you advise investors who park their money on both these stocks?
I think two things. First of all, RBL is actually quite an interesting stock, relatively small, but they're doing a lot of work on the tech front, and I believe that's going to help a lot of business going forward. And to be frank, I think Bandhan and RBL are probably Bajaj Finance's biggest competitors in the future. It may not be now, but I think going forward they're going to be very, very aggressive, and they might actually be a place where Bajaj Finance will find it difficult at some point to be able to compete with them. But having said that, they're currently new, they're currently small. Though Bandhan is a 72,000 crore market cap company, I feel that the way they're going at 500 crores a quarter, if they're able to grow that to 3,000 crore a year profit, we should be able to, that's a 24 times earnings in about a year and a half, which is not too bad for a bank that's growing the size of what Bandhan is. So among the two, I think Bandhan is more attractive from a growth perspective. RBL has a lot more of the hooks on the tech side, which I believe make it a very exciting bank to own. So I hope, and maybe this is a little too early to say, but these could be the big private banks of the future. We may just be seeing the beginning of them. Their valuations will remain a little expensive because from relatively smaller bases they're at, so their valuations look extremely high. But I think both have a lot of promise. We are considering buying as a disclosure. I own one of them, a little quantity in my personal account.
Okay, just before we wrap up this discussion, Deepak, a stock that was caught in the eye of a storm on one day at least, Monday, that is Kesoram Industries. I don't know if you got a chance to see a bunch of videos that appeared on social media as well, and then a couple of articles that were written, something on Bloomberg Quint as well. What did you make of all of this, and what does it mean for somebody who is a minority investor in Kesoram?
I think, it speaks very badly on corporate governance here, Neeraj. I've seen, at least the videos that I saw, I verified a few of the points. There is a company called Camden and a company called Signet. Now, Signet's a subsidiary of Kesoram. Kesoram gave it 400 crore rupees, and Signet also owns a bunch of shares of Birla companies, including, Hindalco and I think Century Textiles, which was the question of, which was the point of the question that was raised at the AGM, saying if Signet owned a very large number, 27 lakh shares of Century Textiles, it sold them at 400 rupees or 500 rupees a share to this company called Camden in March 2016, and then bought those shares back from Camden at a price of about 1,300 or 1,400 rupees, nearly 3 times what they paid, and lost about 200 crores in the bargain. And then 2 months later, proceeded to sell those Century Textile shares back in early 2018 or somewhere in 2018 to Camden again at 900 rupees a share, which is again 100 crore rupee loss. So the question validly asked was, why are we doing this? Why are we benefiting this entity called Camden? And finding out more, Camden turns out to have a lot of common themes with Kesoram. One of the directors in that company has an email address that is at kesoram.net. One of the, I think the company actually has a registered office in a Birla in a similar location, and there are a bunch of other things that at least that the speaker said on the AGM, that there is evidence, reasonable evidence that these are connected parties. So why are you not revealing it as a related party transaction? There has been no answer from the management. The management refused to answer that question in the AGM. They maintained that it was not a related party, therefore they don't have to explain. They also haven't responded to the exchange asking for a clarification on Monday. So it's Friday now, they haven't even responded to that clarification. This is actually very bad corporate governance. Kesoram is not known for corporate governance, but I think this speaks really badly on one of the oldest Indian industrialist groups. So I would, of course, avoid the stock with a barge pole, but this calls into, question a lot of the corporate governance, even in companies that are run by top industrialist families, where I feel that, you can't take corporate governance for granted. You actually should assume that because of their interest in so many fields, one of their companies is going to take the hit for the sins of another of their companies, and shareholders are going to suffer. So you have to give them discounts, not premiums, for being large industrialist family run.
Yeah, well, I actually think that sums it up. A few, what I too thought, maybe slightly unprofessional comments by the management in that AGM too, left a bit to be desired. And maybe the stock is facing the brunt of that. It was 80 rupees or 81 rupees last week. This week has shaved off almost 10 rupees. So that's about 11% gone in the last 7 days, I think, and last 5 days actually. But yeah, the 7-day chart about 15%. That tells you the story why there is pressure on Kesoram Industries. Deepak Shenoy, take a moment to thank you for joining in today and giving us that perspective. Do we have Sarvendra Srivastav? Okay, we'll have him moments from now. Maybe take a break right now. Come back from the break. Talk with Manav Chopra about Kesoram and get in of other ideas. So the Fab 4 stocks coming up. As soon as we come back from the break, at 3:15 we try and tell you what dealing rooms are recommending in the session today, and at 3:20 the top recommendation or top closing strategies from both our experts. Stay tuned. Back with us in Countdown right here on Bloomberg Quint. 26 minutes left for the markets to shut for the day and for the week. Just bring up what Europe is doing currently. We are about 0.5% higher, so we are doing really well for ourselves. Mixed bag for Europe. I think the Dow futures too marginally off. Post Trump's comments yesterday, I think they came off any which ways. Trespassing into the Fed is not something that the market will take very kindly. So some bit of pullback there, some bit of pullback right now. Our markets are up because the previous 2 days they have borne the brunt of some bit of sentiment getting upset due to the no confidence motion being presented today. Now that people know that there's no impact of this, there's a bit of a pullback and revert to mean of sorts. 11,017 for the Nifty as we speak. Okay, before we move any further, let's get in Yash Upadhyay, who is joining us with what has made it to his list of the Fab 4 stocks of the day. Yash, good afternoon once again.
Good afternoon, Neeraj. So the first stock is CIPLA, and that one's reacting positively to their numbers. So their revenues, they have come in at about 1,700 crores, which is about 18% growth on a year-on-year basis. Their EBITDA has grown fourfolds, and the margins that have come, that has been a double-digit number, which the street is liking, and the stock is up about 7%. Alembic Pharma is up 3% after the company received the establishment inspection report from the US FDA for its Gujarat API facility. Now, with that, all of their manufacturing facilities for the international market are FDA compliant, which is a positive news for Alembic. Ashok Leyland has reversed its trend. It had jumped as much as 4% today after the company said that its African unit has received a repeat order worth close to $9.5 million for the supply of about 147 buses. And finally, the rupee effect working in favor of the IT names. So something like an Infosys, that is up about 2.5% today. And most of the other IT names, they too are buzzing. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. I want to just pull up the intraday chart of Mothersumi. That stock surged almost 5% in trade and is now sitting at day's high level 296.5. Manav, on the charts, would you take any fresh position at current levels?
Yes, we can. Actually, the stock has been in a good corrective decline since its highs of 390, and it has kind of formed a minor higher bottom as it made like 280 just a few trading sessions back, and most importantly, a good breakout with good above average volumes definitely indicates some shift of trend change. In fact, the today's prices breakout has actually seen a close above previous 4 days trading candle. So I sense the recent low of 280 would hold. In fact, any decline towards the levels of 290 could be bought into. A stop of 284 can be placed for a positional basis. On the immediate basis, we could see this rally go towards the levels of 306, which was its previous peak, and eventually 315 could be the target.
Okay, that's Mothersumi on the charts, and markets exhibiting good strength. Even the Nifty Pharma Index has surged almost 1.5%. You've got stocks like Aurobindo and Sun-pharma, which are sitting with gains of between 2.5% to 3.5%. But good time to bring in our next expert on board. Natasha Shankar, Senior Vice President and Head of Research at Yes Securities, is right here with us in the studios. Hi Natasha, good afternoon. Good to have you once again in our studios. First up, a word on few earnings, and on top I think Neeraj would like to discuss Bajaj Auto with you. A big miss, not only for the margins, even on top line. Volume growth was pretty strong. They took some price hike during the quarter, but that's not reflecting on the top line at all.
Not at all. In fact, it was quite disappointing from that front. We had expected, in fact, the last time that we were here, we were discussing it as well, that we expected the top line to grow because of the improvement in realizations, as well as the strong growth that they showed on the volume side. So it would be very important to see whether that continues or not, because both the things did not translate either into a top line growth or into a margin improvement. So big miss from our side.
So you're going to look to revise your rating or the targets that you have on this stock?
Not really. We don't really think that just one quarter of poor performance, warrants or merits any kind of a downgrade. We would prefer to watch it for another quarter before we go ahead and make that decision.
We can well make it an auto discussion out and out. You spoke about Mothersumi, that is up. Ashok Leyland is down. Natasha, what's happening here? Okay, let's start off with, you would have studied this or Axel norms in detail. Now, speaking of fund manager yesterday who said that he's going contra because he believed that there is no way that the norms would only have been applicable for the new trucks. Now the clarification is out as well. Yesterday, Nitin Gadkari told us that it is for all vehicles. Is the correction pricing in the negatives, or do you believe competition from Tata, some other pricing pressure, and the fact that we are in the third or the fourth or the fifth year of the upcycle will now take its toll?
So on the seasonality side of it or the cyclicality side of it, yes, we do think that we are all pretty much on the top of the cycle from that perspective. However, having said that, we still think that the fall that we've seen in Ashok Leyland is a bit too much. It has already priced in all the negatives, and at current levels it looks very attractive because the company has to be seen not just as a commercial vehicle manufacturer, but also one who's been trying to bring down all the loss-making businesses with the intention of trying to boost their bottom line. So from that perspective, we are quite positive on the company, and we think at current valuations it looks quite attractive.
Interesting. So, for somebody who's looking to add an auto name, now Maruti was a great add at 8,400, now at 9,400, so it's rallied a bit. If you want to add an auto name and you are agnostic about whether you're adding CV or PV or as the case may be, or a two-wheeler for that matter, what is a good option?
So a couple of ways of playing the entire auto story is, of course, to go by the proxy way and look at the auto ancillaries rather than looking at the frontline auto.
That's a better way to do it right
That's a better way of doing it because some of the auto ancillaries are still available at deep discounts. If you look at Mothersumi, despite the fact that it has run up today, it is still very attractively valued. It is a company which has been able to give you an excellent return on capital employed, has been able to turn around its loss-making subsidiaries. or acquisitions, and at the same time will see the benefit of ramp up in the new facilities as well. So it's available at excellent valuations of, I think our forward estimate is around 15 or 16 times PE, so it looks quite attractive. Another one is Swaraj Engines. It provides engines to Mahindra and Mahindra tractors. So if you're positive on the tractor space and the agri space as such, one could really play it out through Swaraj Engines rather than looking at M&M, which is a little more expensive.
Any thoughts on the tire stocks? CIPLA came out with the numbers and did surprise the street. The stock reacted positively.
So I think within the tire space, we're still positive on Balkrishna Industries. That is a niche play within the tire space. They don't really get under pressure because of China, because OHT tires is a low volume, large numbers kind of a game, and they have been able to garner market share globally. So we're quite positive on that.
I have a counter question to that, Natasha. Their annual report, they are saying in ample measure that 85% of the market, which is exports, is going to be under pressure over the next 12 months. Why would you want to buy a business that by the management's admission is going to face headwinds?
So that is the right time to actually acquire a good business, because that is when the valuations come at discount. And if you're looking at a longer term picture, let's say 2 to 3 years, there is a lot of upside which is available for the company. They have been moving into the OEM space. They have managed to finish the testing on the mining space, which is again a higher margin play for them. And at the same time, the concentration on India has improved significantly. Earlier it used to be less than 5% of the total sales. Now they've managed to inch up year on year every year for the past couple of years. So that is another way of looking at it.
Interesting. Okay. Lots more to talk about. Now, trust me, viewers, we won't just keep it to an auto discussion. There are lots more that we can get from the head of research of their securities. But before we do that, 2 or 3 elements that we need to first figure out. First, try and tell you what's likely to get into the ban or come out of the F&O ban. Get Manav's view on it. Get Darshan to talk about what his sources are telling about dealing rooms. And then some closing strategies. Navneet, though, let's start off. What looks like getting into the ban or coming out of the ban?
Neeraj, surprisingly, IDBI Bank August futures in today's session have seen substantial build-up. So if you look at the July futures, you'll see that there is shedding, but the August futures have seen a substantial build-up. So if you take the entire open interest edition, that's the July futures where the open interest is actually down. There is some shedding seen. August futures will give you a better picture. Look at that. It's up almost 100%. In absolute terms, almost 90 to 95 lakh shares so far have been added for the August futures. So the overall open interest as a percentage of market-wide position limit yesterday was 89, and if this stands as it is, the August futures open interest build-up, it is likely to enter into the F&O ban by breaching the 95% mark. But there are instances when you see such a build-up in the last 10 to 15 minutes of trade, there is some unwinding also which takes place.
Yeah, so we'll monitor this. Maybe give a fresh update at about 325. But Manav, just look up IDBI Bank, the trade thereof, and tell us if indeed it were to hit the ban, could it have an impact on trade as it stands right now?
See, looking at the chart formations, there is a series of support clusters which is around the levels of 54, 55, and in case if those levels hold on, you will see some sort of, some fresh buying that could come into the picture, or short covering once the prices exceeds the levels of 62. So, since the prices have already declined from the levels of 80, it will be very important to see how actually the stock reacts above the levels of 60. I think that is only when you will see some sort of a short covering or a series of contrarian move that would come into the picture. But I think looking at the overall scenario, I sense some sort of a reversal formation coming into in this place, and will not be surprised to see a sharp move of at least 10%.
Okay, sharp move of at least 10% on IDBI Bank. Manav, thanks for that call. Stay on. We'll get in closing strategies as well. Just before we get in more dealing rooms are recommending in the session today, I want to mark Sun-pharma. I think that's just inched up more in the last few minutes of trade today. Exporters anyways have a field day, but look at Sun-pharma and that sharp uptick there. Currently up about 3%, 561 and counting. Actually, a quick view here, Manav. Sun-pharma.
Yes, in fact, the stock actually has been consolidating, and after a sharp decline, it held on to its important support of 540, which was its 100 EMA, and now it has inched higher, and it's moving above its previous 2 days session high. So I sense on the immediate basis the stock is not only gearing for a very short-term up move, but eventually as pharma space is gearing up for a 20-25% upside. On the immediate basis, Sun-pharma could see rally close to the levels of 600, but eventually I will not be surprised to see Sun-pharma close to the levels of 650, possibly also in less than 2 months.
Interesting. Okay, 3:15, that time of the show where we get you what dealing rooms are recommending in the session today. Darshan Mehta is here with his channel checks. Darshan, good afternoon. What are you learning?
Yeah, so Neeraj, at this point of time, it's only the large caps or the result plays that are reacting. Not too much happening on the mid cap side. But C8 came out with a rather strong set of numbers today. Not only did it have a substantial jump over what it did last year, even it came in much ahead of what the street was anticipating. It's not trading at lifetime high. Some while back it was trading near record lows, so the short covering rally is much more possible on C8, and because of C8 the other tire stocks are also moving up in trade today. So C8 is one of the stocks that's been spoken about. Reliance, the juggernaut, continues trading at new record highs. Ahead of the results, there seems to be enough accumulation that's happening. The momentum will continue as per dealers on Reliance Industries. And the last stock that dealers are talking about, Maruti Suzuki. Some of the dealers indicate that it will see a little bit of consolidation in and around the 9350, 9400 mark, but then that's the next level of up move they believe will come in. Some of the domestic funds are actively accumulating Maruti, so that's what's been spoken about.
Okay, Darshan, thanks a lot for bringing that dealing room check with us. One stock which is trending lower today, and we've seen some shorting coming by, is United Breweries. I think now it's sitting at days low level, down almost 4.5 to 5% in trade. That's UBL. The chart will just come up on your screen. Sarvendra, on the charts, UBL down almost 4% at days low. Is it a good opportunity to short the stock?
I think the stock is still at the long-term averages. So the one part of the decline from 1300 odd to wherever we are at 1075, which is the long-term 200 exponential, I think one leg is already done. The next leg down will now probably open up once we start decisively breaking past the lows that we printed yesterday. So that was a sharp recovery and a sharp bar yesterday, and the low was at 10,031. So now you would want to ideally this one to break 1031 on a closing basis and start trading lower. And then probably the risk rewards downside will open up. Else, I think if you look from a long-term perspective, actually it could be a trade on the other side as well. Probably if you think that the long-term 200-day exponential will hold, which it held last time as well with a small whipsaw, and this time also with a whipsaw. So I think the trade would be then on the long side if you look at the long-term setup. So I would say the first trade probably would come with a stop loss at 10,031 or below. That trade is coming on the long side for a target of around 1150. And if at all we break 1031, then the short side trade will open. So if someone is taking a trade here, I think the trade is on the long side.
No, only just some stocks that have picked up in the last few minutes of trade. Den Networks has had a sharp uptick. I think 5 or 6% in the last 15 minutes of trade. So some upticks there. GVK Power has had some uptick in the last few minutes of trade. Shoppers Stop has gained a little bit, if I'm not wrong, from where it was. And some gains for TVS Sri Chakra. We were talking about tire companies. I think TVS Sri Chakra in the last few minutes of trade too has had some upticks. So good going out there. Natasha, if what did you make of the positive commentary that 2 or 3 companies have given? I mean, from amongst the ones that we've spoken to, Sterlite Tech, very positive commentary. Bajaj Finance, fairly positive commentary. Couple of days ago, one more tire company came out and gave fairly positive commentary. Though we did speak about the tire space, non-tire. What about these two?
So I think if you're looking at Bajaj Finance, it's a stock we've been positive on for a while. It's a play on the consumption story. However, we would not go ahead and buy at these levels, largely because we see very little upside. It's around 12 to 13% in our estimates, and we prefer at least a clear-cut in return of about 15% before we go ahead and buy a stock.
What about FinServ?
Finserv again is quite expensive. It gets a holding company discount to Bajaj Finance, of course, and even discounting the kind of discount that it really deserves, we think that it's quite expensive at current valuation. So not an accumulation, but an accumulation on dips is what we would suggest there.
Are they turning out to be the next HDFC twins of the market?
Let's just see.
Okay, just want to pull up PC Jewelers. There's a sharp surge which has come in the stock. The day's low level was somewhere about 65, and as you can see in the last 10 to 15 minutes of trade, there's a sharp recovery which has kicked in. But not to forget, the stock's already fallen a lot for the week, currently at about 81. Natasha, wanted to discuss the banking numbers with you. We had Kotak coming out with the numbers, some bit of disappointment with provisions being higher. But on the other side, if you look at, Federal Bank, RBL, Bandhan, all of them have done pretty well. We've seen good reaction also, come in terms of stock prices. What was the hit and miss according to you as of now, the numbers which have come from the banking lot?
I think both RBL as well as Bandhan Bank were quite good. We did expect a good set of numbers coming in from them, particularly from RBL, given the fact that they're seeing a lot of tailwinds coming in on the retail side, as well as the fact that they have a unique business model. However, having said that, one has to remember that the loan book is still quite young, and there could be risks to it going ahead. But despite those risks, we think it's quite attractive. Same thing with Bandhan Bank. The numbers were very, very positive. Kotak, we've always had a sell on the stock purely in terms of valuations, because we think that in order to maintain their ROEs at such a high levels, or they would have to either try and slow down the business or give up the ROE in order to try and grow the business. This is our general estimate of it.
Interesting. I was listening to Vishwaveer Ahuja talking to Ira post the numbers, and when asked about the growth, he said that he's very confident that this growth will stay unless something really dramatic happens. He doesn't foresee any risks to the growth, and remember, the numbers were slightly better than I think what the street was working with. So he was very confident about these numbers staying put. So that's interesting. The only spanner in the wheel, and just before getting closing strategies, is that Rajiv Jain today was fairly sure that Q3 and Q4 we'll see NIMS compression because of rate hike issues and cost of funding moving up. So he was fairly confident. If it happens for them, it could well happen for a bunch of other. I'm not talking about banks really, but financials by and large. So it'll be interesting to watch that. But let's wait and watch. However, 320 or actually 321, let's get in closing strategies from our experts. Manav Chopra, to you first. Your top closing strategy.
My first buy call would be on CIPLA. The prices have actually seen a very good support from its short-term averages and a good reversal on the weekly formation. I sense, with Pharma's good outperformance, I think CIPLA could also see a good momentum on the upside. The volume has also given a good confirmation. One can buy with a stop of 618 on the lower side for an upside target of 645. And my second call would be buy on BEL. Basically, a series of positive divergence led by a good morning star pattern on the daily confirms a good short-term bottom in place, and I sense instead of one can also take a BTST and also a positional call on this stop of 100 on the lower side for an upside target of 106.
Sarvendra, what is your top closing strategy?
I will go with the metal space. I would say that has been the sector that has been the weakest this week, and the way they've been breaking and closing below crucial levels, especially for the month and also for the week. Month, we still have some time, 1 week more to go, but I think the reversals, if at all, would be the pullbacks would be small ones, and the sector as a whole will continue to suffer for some more time now. So 15-20 days more of weakness is probably visible both for Tata Steel, Hindalco, and in fact Vedanta as well. So I would say I would like to short sell Hindalco, and I would look for a target in the region of around 188 going forward. This would be a 3-4 session call. So for next 3-4 sessions, 188 is the target, and if you are shorting that, then 200 rupees 10 paise is your stop loss on the spot prices for Hindalco. And the other one is I would go with Vedanta as well. I think clearly for the week, again closing much lower. The whole week has traded, the real body has traded below the range for the last week as well. So that's clearly a sign of weakness going forward. So I would say Vedanta again a target of around 190 on the downside. And if you're doing that, then you're keeping a stop loss at around 207.10 on spot. And both these trades would be 3 to 4 sessions.
Okay, so that's a sell call on metal stocks Vedanta as well as Hindalco. Natasha, before we let you go, your thoughts on the news which is there in the market right now that Novelis could acquire Aleris. I think there were some concerns with regard to valuations on trailing basis. EV by EBITDA seems to be 12 to 13 vis-a-vis where Hindalco currently trades. But I think the bet is now on the forward earnings because they've set new plants which will go on stream on the auto side and also in the aerospace, and that's what the street is betting. But overall, do you think if they have to raise debt to acquire this, will it be beneficial?
Not really. We think it's very expensive in terms of valuations, and we've seen in the past also that whenever the valuations are, skewed towards the expensive side, it takes a very long time for it to actually start becoming EPS accretive for the entire merged entity. So we don't really think it's a very positive development at this point.
You guys have rating on Hindalco?
No, we had to drop it.
Do you have a rating on HEG and Graphite India? HEG is up at fresh highs yet again.
No, we don't cover those.
You don't cover those two. Okay. Natasha, so good having you. Did we ask you about your favorite stock currently? Forget the auto space.
I think I just spoke about it, the Swaraj engines.
No,
right?
that's just the auto pack.
So we are very positive on auto and we really like that.
But that's your personal bias too, right?
I like the sector.
All right.
Right.
Fair call.
Thank you.
Thanks so much, Natasha. Thanks for joining in today and giving us that perspective. One quick question though on Sarvendra, on a set of stocks that have done very well today. One of them is Bandhan. And it's not just today, actually. This week has been fabulous for Bandhan Bank. For somebody who initiated long or had some long positions in the cash market, of course, are these topish levels? So should somebody book profits here?
Neeraj, I think the data for Bandhan is very, very limited. So you will not be able to do a slightly medium to long term kind of analysis. But yes, in the short term, there's no reason to book profits. It's always said it's better that if you're running in profits, let them run, keep a trailing stop loss and just hold with that trend. So, and being a new stock, very limited data, it's already into uncharted territory. We can't see any support resistances from the past coming into play for this one. So it's a neat, clean move. It's a new stock. So there's no legacy. There's no one trapped at higher levels. These are good and new levels for everyone, present and past as well. So these are new levels. I would say for Bandhan, you should stay in this trade. Looking at the short-term setup, just trail your stop losses. If you are already long, then your stops will be slightly deep, but they will be close to 620. So around 620 is what I can find some important numbers. So 620 or below, you keep a stop loss. Ride this trend. The momentum is still on. Deliveries are good. So 710, 720, doable here. So I would say hold.
Okay, hold on to Bandhan Bank, but a lot of your pharma stocks have bucked the trend in today's session. I think the gains have just come in the last half an hour to 45 minutes. Neeraj highlighted something like Sun-pharma, but you've also got Granules that's gone up almost 5% in trade. And I guess CIPLA too has perked up today. Sun-pharma almost at day's high level with gains of 3%. And Granules India now sitting with almost a day's high mark, sitting with gains of 6%. What else has gone up? Bharat Electronics among the F&O securities has seen gains of almost 5%. And also a beaten down counter like Infibeam that surged about 8%. So clearly with market trending higher, we've seen a lot of these stocks which have been beaten down in the recent past are gaining some bit of traction. Infibeam actually off the day's high, sitting with gains of nearly 6%. All right, just few minutes to go for markets to close. Good time to head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, I'll term it as a positive close on this Friday because in the last two sessions, we were struggling to close above the mark of 11,000.
Yeah, and despite the fact that we've come off a little bit from the highs of the day, yes, it is a positive close. Keep in mind, world markets aren't doing all that well. Bring up the mid caps and the small caps. They also have done reasonably okay. The BSE 500, 0.5% notwithstanding. The small cap index, 0.75%. The mid cap index, almost 1%. So it's been a good, strong close to the trading day today. Let me talk about the Nifty names, and Navneet will bring you up to speed with what's happened in the more liquid universe on the F&O side and the mid caps and the small caps. But the index per se, Bajaj Finance, Bajaj Finserv, big moves for both of those stocks, doing extremely well. CIPLA about 3% higher, Sun-pharma about 3% higher. That's ending close to the day's highs. So exporters, CIPLA, not so much CIPLA, but Sun-pharma, Tech Mahindra, Infosys, HCL Technologies. So IT by and large doing very well. And Reliance Industries, don't forget this one, up about 2 percentage points. What's not done well at the lowest point of the day is Bajaj Auto, down 9%. OMC is by and large weak. Vedanta looking extremely weak. For the week as well, it's been a rather tumultuous time for Vedanta. ONGC down about a couple of percentage points, and Hero MotoCorp being dragged down as well. Maybe people believe that what's happened to Bajaj Auto's revenues and margins, importantly, could well happen to Hero as well. But what about the mid-cap universe, Navneet? A flurry of activity there, a bunch of stocks hitting new highs too.
That's right, Neeraj. A lot of result reactions also coming in, and some respite. We're getting a positive close in the broader markets today. So let me start off with Z Media, which came out with its numbers just in the last hour of trade. The stocks locked in upper circuit. That's the Nifty mid-cap index. Z Media came out with the numbers locked in upper circuit. Good operating performance seen for this counter. I think the operating profits were up over 40%. Two stocks which have been surging this month, and we've been highlighting them: Adani Power and Adani Enterprises. Both of them are in the F&O band, so there is heightened trading activity that we know. But even on the cash side, I think the momentum continues for these. If you look at Adani Enterprises, just for the month of July is up nearly 43 to 45%. Adani Power is also up nearly 50% only in the month of July. But also keep in mind, these stocks are beaten down, but the bounce back has been really sharp for both these stocks. The other one, CIET, that reacted positively to the numbers today. Good bottom line performance seen there, 8% higher for CIET. And Bandhan Bank touching live highs in today's trade. Good going. The numbers came in yesterday, clearly meeting the street estimates, 10% higher for this one. And also RBL Bank doing pretty well in today's session. That too was up almost 3 to 4%. Jubilant Foodworks, the numbers come in next week on 25th July. Ahead of that, the stock touched live highs, 4.5% for that one. And Mothersumi saw good gains in last hour of trade. That was up nearly 5, closing at day's high, actually up 6%. On the losing side, some result reactions actually. ABB numbers were pretty much in line. Margins did see a bit of expansion, but looks like there was some profit booking, 2% lower for ABB. Kansai Nerolac, though the revenue growth was pretty strong, but I guess the margins were impacted because of weaker rupee and crude prices inching higher. But you did see a bit of recovery post the earnings. It's closing just about flattish for the day. And 8K Miles was down. Some of the other counters among the F&O securities where fresh shots were seen were stocks like Indian Bank and also United Breweries, which was weak throughout the session today. Indian Bank closing with cuts of 5%, and United Breweries saw cuts of nearly 4 to 5% in today's session, Neeraj.
Well, so on the whole, the weekly performance will come up on your screen. Today, as Namit said, was a good day. Remember, Thursday and Wednesday were just about ordinary. But let's get the weekly performance up on the screen. And this is what we've done on a 5-day basis. Flat for the market. Remember, this is the Nifty view. Nifty performance, which is flat. But look at the gainers and financials right out there, Navneet. Finance, Indiabulls Housing Finance, Bajaj Finserv, Yes Bank, and Axis Bank too featuring in that list. Yeah, we do have Kotak Bank down there, but that's probably the only sore spot. Otherwise, financials have really rocked the scene in this week gone by.
That's right. And on the losing side, Neeraj, I think Dr. Reddy's, which lost 11%, was majorly on back of that court ruling which came in. So that was down 11%. Hindalco, because of the news of acquiring a company in US, saw a big beating in yesterday's trade. And also, I think it's the metal stocks which have been taking the beating with, look at Vedanta, Hindalco, or even Tata Steel. All of them were down. In fact, Tata Steel also touched fresh lows for the week.
Yeah. So it's been a interesting week all round. Upstream has done well despite crude prices falling. Good going there. What about the mid caps and the small? Oh, this is the NSE 500, actually the broader market. And again, look at the gainers. Bajaj Finance features there too. Federal Bank, interesting reaction to its numbers, by the way. That did well. Sterlite Technologies, a results reaction. But HEG got included in, and Graphite got included in ASM. Got hammered down. People talk about how for near term the valuations are pricing in, not thinking long term. But hey, people want to buy it.
I think let's wait for the earnings. It's going to be very interesting to see how the earnings pan out for HEG Graphite, since the commentary has been pretty good. But on the losing side, I think there are all your usual suspects from the likes of PC. Dilip Bilkon was down almost 20% for the week. Ashok Leyland, I think, is the highlight, Neeraj, because of the numbers and the new norms which had come in. That took a huge beating of almost 19%. But interestingly, any funda or any technical analyst we asked this question about Ashok Leyland, they've been suggesting that it's a good entry level now for the stock.
Yeah, and I thought Inox Leisure too, Navneet, because I think the news came out Friday.
Last Friday,
the stock corrected that day and has corrected another 17%, which means investors, serious investors, do believe that this may well become a ruling that could get spread out across the country. Yep. And while people that I've spoken to speak about there being a Mandavli in the offing at some point of time, but it does result in some bit of pullback on the F&B revenues, and that shouldn't sit too well. So well, no surprise there. This one is corrected around the 17%. But that's the long and short of what's happened in the markets. Let's get in final thoughts from our experts. And Manav, to you first. For somebody who's looking at creating index positions, what does the close this week, and a flattish one at that, tell you about what the trade next week could be like?
Of course, it is flattish, but the most important thing is that we have held even the previous week's lows, and a short-term consolidation after a sharp move is usually the breather that the market looks out for and eventually breaks on the high side. Like I mentioned, 10,900 is the support, and as long as we are holding above these levels, I think there's nothing to worry, at least for the index point of view. And this short-term consolidation is likely to be broken on the upside. So for a short-term perspective, traders can look to maintain an upside target of 11,200, and once if that is taken above, 11,500 could be the next levels to look out for.
Okay, Sarvendra, what about you? What would your approach be to Nifty and Bank Nifty on Monday?
See, I think we are kind of closing in no man's territory, because last week we also tried to position on the breakout, but the only silver lining this week is that you've kind of held clear of 10,930, but beyond that you have not done anything. Last 10-12 days of this range, when we got out of this range, the breadth has by and large been negative. And this has never happened in history. I've gone back and checked as late as the 1990s, 1980s, early 1980s. I think this kind of divergence has never happened into a breakout there. For the first 12 days of a fresh breakout, the breadth remains negative in almost 8 to 9 of those sessions, and that too in the region of 1:3, 1:4 negative in favor of declines. So I would not see this as a healthy breakout. But yes, purely on a number, if you had a stop loss, if you had a position, you have to close that. So, but my sense is that I'll wait out next week and see as to what has to be done. It's a no man's land, and if this fails below 10,900, then the sell-off could be even sharper. So I would say I'm in no man's camp right now, but I would take a call next week.
Okay, Jamin, thank you so much for joining in today and giving us those perspectives. Manav as well as Sarvendra, really appreciate your time, and have a great weekend ahead. And viewers too, have a great weekend. It's a wrap on this edition of Countdown from me and Navneet and the team that put this show together. Thank you so much for watching. But we'll wrap up the entire days and the week's action on the Bloomberg Quint Market Wrap coming up on the other side.